Okay, we're in the same place at the same time, and we have the same market. All-time new highs again on the horizon, up 7 of the last 9 days. No one even cared about the 2 down days. They were this small. We got some offerings after the close. We have some guidance by Steel Dynamics. We got a really special guest today at 8:35. Jasper Singh of the Minority Mindset's going to join us. 2.3 million YouTube followers, folks. He'll be joining us, and we're going to talk macro. We're going to talk the big picture with him. We got some ratings to cover. Apple, we'll talk about Apple moving higher. That's a jam-packed show on this Tuesday's Pre-Market Prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, strong close yesterday, continuing higher, 9.25 handle, 66.8850. Buck pulling back on under 97, down 22 cents, 96.68. TLT still rallying here, up 29 cents, 90.45. We haven't been up in the 90 area since late April. USO flat, 74.40. GLD and SLV up modestly here. Bitcoin, that's kind of flat too. Just over 115,000 on the futures, getting back half of that move and see if we could do better than that. Let's bring in Triple D. Triple D got out of the house yesterday, went all the way to Toronto. And how was it meeting with our friends over there at Stock Market TV?
Yeah, met with JC Peretz. We've known JC a long time. Spencer Israel set this all up there. So they were doing their portfolio accelerator event there in Toronto. It was a lot of fun. Met lots of people. Phil Pearlman there. Lots of other people that I met. So it was really good. Straza was there, Steve Straza. We were talking. We're going to bring some of those people back over on our show as well. So a little bit of trading where I might go over on a little bit of Stock Market TV. We'll bring a few of those guys over back here, Pre-Market Prep. We're going to get JC Peretz back on here because it's been a long time since JC's been on the show. So he's a lot of fun. Great. Thanks, JC. If you're listening, thank you so much. That was fantastic. Straza was awesome as well. Everybody that presented was really good. It was good, man. And I did a little presentation, which I'm going to show.
ETF effect. How'd they like that?
No, they loved it. So I talked high frequency trading and ETF effects. I'm going to be doing that lecture for the STN room on Stock Trader Network at 10 o'clock here today too. So if you want to do a free trial, it might be the day. And if you're not done your free trial at Stock Trader Network, you're missing trades because before I left, I gave you a trade. I said, you know what to buy tonight because it was pulling back was Oracle. So I said Oracle the night before. I said Oracle again. Yeah, spoon feeding this one here. And Oracle is the news of the day. Why did I say Oracle? Because we've saw this buyer on the open for the last few days, and it's been there. And it continues to be there this morning, another 62,000 shares to buy. But just the pullback, the stock feels like it had turned. I said it on Pre-Market Prep yesterday. I feel like it turned. I bought Oracle. And if you bought it yesterday at the close of 302.14, you were up a cool 5.2%. So congrats to everybody in the Stock Trader Network room. I know a bunch of you guys bought that there. Good job.
You got a little news, Dennis. Dennis, it's not the buy and balance so much. It's
the news. But the buy and balance is still there. But the buy and balance, Joel, like when it has buy and balances like that, sometimes tells us that, hey, somebody really wants in this. Somebody really needs to be in this. There was over 1 million shares to buy on the open yesterday. Why? Well, maybe it was, just the fact that the stock, had dipped and people were coming in here. Also, maybe it's somebody that knows something. You just never know. So, I mean, following these imbalances is kind of like people always talk about, follow, the unusual options activity. I'll tell you, you sometimes get a lot more information by following the pre-market imbalances than you do the options activity. And that's why we focus so much in Stock Trader Network. We focus on all these edges, folks, public information, where you can feel like you get an edge here. And you know what? On Oracle, hey, man, it worked. Brentster, I want to bring you in here. The Brentster is here, working the news desk for us in the background here. This news from Oracle here, this is not new news though, Brett. Like this is not something that like, oh my gosh, Oracle might buy TikTok. This is something that's been rumored for a very, very long time, but we're getting some confirmation here that, hey, maybe Oracle really is going to be, in a deal for TikTok.
Yeah, I'm looking at a CBS News report. It was updated this morning. The article is titled "Oracle Could Play a Key Role in TikTok Deal Between Trump Administration and China," sources say. And Dennis, I was asking you, like, when we've had TikTok headlines related to a deal with the U.S. or concerns about a deal with the U.S., Oracle's been the stock that moves first very consistently. Am I right?
Yeah, I mean, yes.
So yeah, I'm a little confused by the price action, but
It seems like a really big move for news that we kind of already knew.
I
Like,
think we
that's
definitely
where,
already knew.
yeah, we definitely already knew this. So I mean, but
Yeah.
this market maybe wanted an excuse. And sometimes we do catalyst trading over there. And again, 166,000 to buy now on Oracle. So somebody just came with another 100,000 to buy on
Wow.
shares of Oracle here at the pre-market. Yeah, so we do this, we look at this, we do this analysis over in the stock trade network where we're looking at imbalance, we're looking at different things. But I mean, with the Oracle specifically here, this is kind of news that we knew. If I had this on for a trade, I would probably sell it today because boom, you just get 18 points there overnight. You kind of got to take the money and run. If you got it on for a long-term investment, which I put some of that on obviously in the long-term account, while long-term investment can be a short-term investment, it'll work in 2 days, but I mean, I do think Oracle is going higher here long run. And I bought this within the long-term account saying this is the dip that I thought. We talked about the 50%, retracement from the whole move, which it kissed. And if you think about it, they're really positioned well if that revenue growth numbers from their earnings are as close to, if they can get anywhere near close to that. So I love the Oracle chart. I love everything about it, but this is a big move, Brent, to your point. And I think from a trading perspective, it's probably more of a sell the news than chase this news.
Yeah, we are getting back over half of the move, and the half of the move that oh boy, this is lining up absolutely perfect. Because you had to break from the all-time high 345.72 down to 291.75. Halfway back of that move takes you to almost 319. You hit that in the pre-market. So you already have done the 50%, or you're right at the 50% tracement here instantaneously. Keep an eye on that pre-market high. Pre-market high is at 320.30. So I don't think it's going to open up that high. I know there's big buying balances here, but
it's indicated open 315 right now. So even with the 168,000 to buy, because there's orders in the book, it's actually indicated open below that. Now I think it's going to grow though, because yesterday we saw the same thing and it grew to over 1 million shares by the open. I think the same thing's going to happen. I think you're going to probably have over 1 million shares of this thing to buy at the open, which drove up the price and drove up the price. But I do think to Brentster's point, to your point here, hard to chase this at this point. I mean, it's funny, we talked about buying the dip 2 days ago, bang. There it is. Buying the dip on strong names is just working.
And just telling you, selling the rip on this thing on the opens. Sometimes Dennis goes into those imbalances, and it could drop 5 points in a minute. I mean, they
change.
Oh,
yeah, right there, and we're usually covering them as they come into the open. And a lot of people look at closing imbalances here, but not that many people look at the pre-market ones. The pre-market ones actually really can give you a feel. So no, just people are asking about where's this information. You got to subscribe. If you're with your broker, you get it through the NYSE imbalance feed. Now NYSE comes out with their imbalances at 8 a.m. NASDAQ does not come out till 9:25. So that's why you see these big moves on NASDAQ stocks at 9:25, because all of a sudden we're getting the opening imbalances. If you don't know what that is, an imbalance is just, the orders that are geared, marked not for pre-market, so they cannot execute pre-market. They are for regular session trading. So we get a glimpse of what the open is going to look like, and that's why they're called opening imbalances there. Right now, Oracle has 168,000 shares to buy. That is relative to the close. So what that means is they have 168,000 more shares to buy relative to the close using the 302. Now, if you look like orders like that are 5,000 to buy on ARCA, those aren't included in there. These are orders that are just geared for the primary exchange, the NYSE. So there'll be other orders in the books as well. So, just breaking that down for you. But we have all this education over on Stock Trader Network as well.
Okay. Yep. And here we are. Like as I said, traded 317.50, market high, 320.30 for Oracle. Dennis, you missed it, but we had a stock go real silly in the after hours. I don't know
You
if you
don't
hit.
say. There's always a
Yeah.
silly one.
Webtoon Entertainment got a little overdone. What'd you say, Brentster?
WBTN out with a press release last night after the close. Actually, Disney did this press release too. It was a little combination. Webtoon going to do a deal with Disney. They have entered into a non-binding term sheet for the development for an all-new digital comics platform that will feature current comic book runs and include decades of past comics from across Disney's portfolio, including Marvel, Star Wars, 20th Century Studios, and more. I'm reading from the press release obviously here, and this is huge news for Webtoon. Obviously, they did have a deal with Disney previously, so this is not totally unexpected. But there is also an aspect here for Disney. I just want to mention this is going to open up a lot more content for the Disney Plus users. Not that anybody really like cares about Disney Plus in the context of the stock, but there could be some ultimate benefit for Disney from this deal also.
This thing got out of control. I will just tell you, immediately I looked to like the all-time high in this, and 25.66 was the all-time high. They decided to take it to $29. Can't say anything is a guarantee, but it's going to have a heck of a hard time getting back up to 29. I mean, that was just
These algos
oh
just
my,
go nuts. They see these headlines and they just go nuts. And there is opportunities to obviously fade ridiculous moves. And this is probably one of those. But you know, like when you're in there, it's hard when the stocks are going straight up. So like I've taught this for years. When you are shorting stocks, you're not looking like bang, it's going, shorting as it's going up. You want to kick them when it's down. So you wait for that first, candle where it's like stop making a new high. Or you wait for that first, momentum to slow or potentially start going the other way. And then you get another little pop after that where it doesn't make a new high. That's where you strike. Because if you're striking on the way up, you could have been at 22, 24, 26, 28, who knows? But if you just blow that chart up a little bit more, you can see what I'm talking about, Joe. On the next candle where we went down, then we didn't make a new high.
yes.
Now you have a point. Now you have a point where you can say, okay, well, I'm stopping out here. So that's the difficulty here. So I don't like shooting them when they're going straight up. I like, shorting them when they've actually paused or potentially had one ugly little, pullback here. And then they get, a little bit of a bounce back up saying, oh, yeah, it's going to continue to go. And then it doesn't. Shoot them in the back. Don't shoot them in the front.
I think these kind of opportunities, especially in the after hours, I mean, it was throwing around some volume, but it's probably more of a case if you have a long, and you're looking for potential exit. I mean, you could be, you could be a hero and try and short it. I thought the all-time high, 25.66 was a good level, but it looks like you're finding some support here just above $20 in the pre-market. I think you can look. I mean, it's got a huge gap to fill. I don't know if we'll ever do that, but I'll just point out on a monthly candle now that everything's kind of calmed down. The high in August of last year was 21.87. So I look at that if you're looking for another buck. But man, if you bought it up here, I don't know, man. I don't know if this thing's getting back up there. But Disney didn't flinch. Disney's a big stock. This is nothing for Disney. It looks like the big boys are stepping up here at 114.5, 115. You've had this has been in a $3 range for 5 days. I mean, I don't know how many Disney traders we have out here, but we're either gonna
I'm a Disney trader.
Yeah.
And this is in consolidation station. I still think Disney is set up like not that great. So I know it's come a long ways, but there's still a lot of issues there at Disney. So I'm not in love with Disney. We'll just say that.
Okay.
I want to talk about this Trump tweet from yesterday. So I'm going to go off the thing. So, I read it overnight and it's on CNBC. They're talking about it right now too. Trump's saying they need to end quarterly reporting for earnings companies, like to end quarterly reporting. I want to know, and again, maybe I just go find the actual tweet here and just read it. And quarterly, we'll quickly find it. If you guys can find it in the background too, go ahead. I should have been more ready for this. But So Trump tweets out yesterday, trying to find the actual tweet. Here it is. No. Anyways, he truths out, because he doesn't tweet. He truths out. Companies should no longer be required to report their earnings on a quarterly basis. A move that would, that's it. That was the tweet. So I don't know why. I don't know the context here, but he says that companies should be reporting every 6 months, not quarterly. I don't know what to say about that. Obviously it would save some costs to these companies because there is auditors. There's a lot of considerations with that. It would suck for us as traders. We'd have way less, earnings to talk about there. I also think it's a long time to wait in between if something, is changing with the earnings flow, if something's in there. I mean, they can always give earnings warnings, but it would be a long time to wait for 6 months. I have no idea why he's thinking this. So I don't know if Brentster in the background, if you have more context on this or not. I know I went off script here, but I wanted to talk about it and forgot. I don't totally get it.
I don't know if there's much more context here, unfortunately, for the purposes of you getting information, Dennis. But is there? I'm speculating a little wildly here, but is there some real-time implication to this? Would they not be reporting so often because there would be better access to their information anyway? Maybe something with AI. Again, speculation. I don't have any insight on this, but maybe there's something else going on here besides just taking it for what it is on the surface.
Well, here is the full thing. I did find the full truth. So he said subject to SEC approval. So he's already
obviously
throwing this out somewhere behind the scenes, trying to work his magic here. Subject to SEC approval, companies and corporations should no longer be forced to report on a quarterly basis, which is quarterly reporting, he puts in brackets, but rather to report on a six-month basis. This will save money and allow managers to focus on properly running their companies. Did you ever hear the statement that China has a 50 to 100 year view on management of a company, whereas we run our companies on a quarterly basis? Not good. So I guess, he's trying to end short-termism here, where companies are so much worried about the quarterly numbers here that, maybe if they're only reporting every 6 months, that, that they can focus more on the company, not worry so much about, making sure every quarter that they beat. But
I get it.
This is kind of weird, man. It's kind of a weird thing for him to say.
What was that last thing you said about us in China? What was
he said, did you ever hear the statement that China has a 50 to 100 year, this is his tweet, did you ever hear the statement that China has a 50 to 100 year view on a management of a company, whereas we run our companies on a quarterly basis? So obviously he's saying we're running, too much short-termism in there. And, we should be focused more on the longer term. I kind of agree with that.
That kind
of makes sense.
Yeah.
I don't think anybody's ever considered going to 6 month reporting.
Look at, okay, would you rather have China's economy and economic structure or our economy?
Well, and there's a good point there too.
I think that's all that needs to be said
for a very long time.
Yeah,
obviously, you got a communist country versus free market capitalism, so there's a lot of considerations. Definitely not comparing apples to oranges here, but I agree that companies themselves should be worried about the longer term implications, and I do think a lot of companies run short term strategies basically to help their numbers. So there is some truth to this. I don't think there's any chance this is going to happen, though. I don't think, subject to SEC approval, kind of acting like, oh, this is in the works. I very much doubt that we're going to move from quarterly reporting. So I don't think anything's going to happen of this, but, it's just, he's into everything. I mean, you want to talk about the disruptor of all disruptors. It's Donald Trump. He's disrupting this industry and disrupting that industry. And, he's disrupting now quarterly reports. It's interesting. He keeps the markets interesting, to say the least.
Just before we go to our next topic, and I've seen this come up, Jay mentioned, the market was up, the VIX was up yesterday, and we followed the VIX as an indicator. I mean, people just want some protection. right? We had a couple of the big houses came out yesterday and say this is a sell the news event. If the Fed comes out and says, yeah, we're cutting, but we're not sure. I mean, protection is cheap right now, and it could get cheaper. So, you're sitting on profits. It's there, a little nervousness. They're out there, with their billions of longs positions, taking some hedges is probably not a bad idea for the individual investor. It's very, very hard to, time it. But that's what you saw. People just, worried about what Jerome's going to say, though he's been very cooperative. So that's what I think and I just think it's common sense. People look at protection's cheap. We had Danny Kirsch on yesterday. He was saying it was cheap. He was looking at put spreads, and when he was on last month, he said, "Man, I don't know what the Qs calls are cheap, but that's the options market for you, and doesn't mean anything's coming down the pipeline." Just
one thing I will say, being at JC's Portfolio Accelerator event yesterday is, they look, and they kind of take a longer term perspective on a lot of stuff and then looking out a long ways. You just look at the international markets. They did a lot of international markets, and these international markets are all breaking out, like from long-term bases. Everybody thinks about China. It's like, oh, China, it's really having a good year. It isn't just China, folks. It is every international market having a good year here. The EM is obviously a big chunk of China, but it's also a lot of other emerging markets in Asia as well. And other markets too. It's not just Asia. So, it's just having a hell of a year. You look at the EFA, Europe. These stocks are breaking out from, underperforming for a very, very long time. They're looking good there. Even Canada, with all the tariffs and all the concerns, EWC has done very well. A little bit of currency effects maybe in some of this stuff here too. So you have to look how your ETFs are. Some of them aren't hedged. Some of them are obviously picking up because of currency effects. But international markets here have been kind of in the doldrums for years now. Now we're starting to actually look like, we're getting some productive breakouts. You give EFA, for instance, it was $82 back in 2021. Well, it's 93 now. So you're 4 or 5 years later here, and we're only up like 10% in 5 years. So, we're not really in a bubble in any of these international markets. And I'd argue we're not really in a bubble in a lot of US stocks too. It's just a bubble in certain stocks. So everybody who's thinking, oh, the market's overdone and we've got this imminent crash coming here, there's a lot of healthy markets out here right now. It doesn't look to me like we're in this huge irrational exuberance bubble. It looks like in the international markets, especially with like an FXI, that we're just getting started.
The laggard trade, we were talking about the EM, EFA for years and years. You could talk about the dollar. Their interest rates they've been on a little bit of a different interest rate cycle. So, you can't argue, and you talk about bubble and price action and stuff. This is just grinding higher. It's not, there's not the ridiculous, if you want a bubble, let's be up 100 handles off the Fed tomorrow. Then you could start. But the price action that you're seeing right now is underneath demand, people that are underinvested. And yeah, there's some sellers here at levels taking profits. Yeah, there's some hedging going on at this time. But we'll see. We know what the Fed's going to do. We just don't know what they're going to say at the press conference for going forward. That is after hours. A lot of offerings came out, and before I go to these individual offerings, I just want to get your general opinion. It's just getting when the getting's good, doing the offerings. Is that what you think?
And again, so just countering my recent point, there is a lot of stocks that have had very ridiculous moves that are trading at nosebleed valuations. And those companies, a lot of them are not making any money. They don't have projections to make any money. And they're using their elevated stock prices to raise cash as they should. So, you can look at Rocket Lab and everybody's talking about RKLB, for instance. Company is trading 54 times sales. Obviously the sales numbers could come up, but you're talking about a $26 billion stock with had $144 million in revenue last quarter. So, I mean, we're talking about very, very nosebleed valuations, companies that don't really look like they're going to make money anytime soon. So Rocket Labs is a company that is very, possible to do an offering. So last night they come up, and it actually, I don't believe it was an offering. This looks like a shelf because I wasn't here last night. Was this just a shelf?
Yep. Yeah, it disclosed it may offer and sell
From
up
time to time.
Yeah, time
Up
to
to
time.
$750 million worth of stock, or 750, $750 million
Yeah,
common
common
stock from
stock.
time to time. I mean, the stock has run so far. I mean, this was $20 stock back in May. It's $54 here now. So it's down a couple bucks here today because of the potential of an offering. I will tell you, usually when you get these shelves on these companies, usually they do turn an offering. Sometimes they do it that night. They did not do it last night, but it could be coming. So, and obviously investors are selling first and asking questions later here. I mean, is the Rocket Lab story over? No, but you've got to just consider, sometimes what you're buying as well. I mean, it's hard to justify, we don't know where it's going. Sexy story, stocks near all-time highs, hard to be bearish stocks that are making new all-time highs, and we know fundamentals don't matter as much as a sexy story. So, valuation, you can't really look at it and tell you, obviously the story starts to cool off. Then you start looking at valuation, and obviously the company would have issues. But right now, momentum traders are still there, but they're a little bit concerned that they could get an offering shoved down their throat anytime.
We are just going to look at the range from yesterday, and I would just, based on all things being equal, you did make a new all-time high yesterday, an all-time closing high. Don't know if we're going to get back up to that 55.17 level. But I would look at yesterday's low, 52.72, gap fill, potential resistance, and then the all-time closing high. This is your better longer-term number, 54.04. That was your close from yesterday. I mean, also, you just have to look at it that, the execs from the company. I mean, like, yeah, can I sell some stock here? I mean, I want to buy a new Ferrari or something. And, here's a great opportunity to do it. The stocks had a massive run. They don't, what we've talked about the numbers, but they're irrelevant. So that's what you're seeing. I will say on the downside here, if you can't catch a bid at the pre-market low of 51, your next daily low is not until under $50. So keep an eye on Rocket Labs. Also a stock that you've been following for a long time, Dennis. Oscar Health, convertible notes offering to fuel AI expansion and member experience. So
same thing. So raising money, stocks had an incredible run. I did sell half of it, in the STN room. We talked about that. I bought it in 14, I think. And I sold half of it just to 20 because I was like, it's been a pretty good run here now. Obviously hindsight capital 2020, I should have sold it all, but I was trying to hold a little bit longer term here. I think the dip eventually. This is a storied stock. Retail loves this stock. I do think there's still a story here. I don't know if I'm necessarily buying the dip. I think I'd wait for pricing on that. Maybe you're going to get the pricing. It's convertible note. So let's see what it does there. Haven't fully analyzed. I'm going to rebuy some of those shares that I sold. Also, Red Cat, RCAT, also had a shelf, I believe. Yeah, mixed shelf for 300 million shares. Same thing. Stocks run a long ways. A lot of these companies don't have any path to profitability here, so it's not surprising. One stock that actually going the other way here is NUKK, and they removed their shelf. So they put a shelf out there that they were going to do an offering, and then they removed it last night, meaning now we changed our mind. We are not going to go with, an offering here, and that ripped the stock higher here. It's up 19% because that means dilution is not coming for Nucleus here. This stock has been a disaster. So unlike so many other big names, that have really done well, this stock has not done well. It obviously had that move from $1 to, is that right? Or was there a reorg when it went from $1 to $78 back last year? Is that right? Did it really do that? Or is that like just, was a split or something that isn't adjusting my charts? You see the move from last year?
Yeah, I do. Well, I could see it better if I had a white chart up, but let me see if I can do it. Yeah, there it is. I don't know. I don't know if it was a reorg or I'd have to dig the news on that. But it's had a couple spikes, just over $7. So I think that's what is the most relevant thing to keep an eye on here for NUKK. It's actually a fintech company, not a nuclear company. So see if you get a chance to buy a little bit of a pullback, removing that shelf. Guidance, Dennis. We're kind of out of earnings season here, but we did get some guidance from STLD. Brad, I think we had some other steel news too. They came out right before that, but Steel Dynamics comes out with the street. They provide some guidance.
Retail
there.
sales too. I just want to interrupt you here, Joel, because we got retail sales are coming in a little bit hot, 0.6% versus 0.2% here. Import price is also coming in 0.3% versus expected minus 0.2%. So you got the import price index coming in a little bit hot here too. Not going to make a difference, folks. Sorry, none of this is going to matter here. It's obviously a smaller number anyways. So don't worry, your interest rate cut is still coming tomorrow here. But, you know, this is something that's leaking the TLT just slightly here. We are seeing a little bit of selling pressure in the IWM. It was trading green before this number. It is still trading green because it actually is ex-dividend here today. But it's given back a little bit of the gains. Just a little leak on this number, which you can see.
Yeah, slightly. We got almost kissed 6,700, and now we're just getting a little pullback here. I think I had this marked as not many levels when you get up here, folks, but coming back to mid range on the session. That's down at 65.84. We're still 4 handles away from that. Back to the Steel Dynamics guidance here. Guidance 260 to 264, slightly above the 258 estimate. So let's take a look at the Steel Dynamics chart. And you did get a pop up to 134. It actually traded a little bit hot. Let's get the pre-market chart up here. So Steel Dynamics trading up off their guidance.
Other stocks, not really moving on that last night. I wasn't here either.
Nope.
So it's up just slightly. Nucor up just slightly was bid here. Again, slight leak here in the markets here. So one other stock I didn't cover here yet, and I do want to cover here is Bloom Energy here. The stock has been just flying here. I know JC been calling this out in chat room here. Congratulations. It's really been moving here. It was commentary here on and why Bloom Energy is moving even more here this morning is Morgan Stanley's coming out with commentary on Bloom Energy BE. They see Oracle's massive upside booking surprise opens up new visions for Bloom's potential scale. So they are citing the Oracle good news. They are raising their price target from 44 to 85. Yeah, just more color here. Last week, Oracle posted substantial bookings beats. Expectations backlog up $317 billion to $0.5 trillion. They're saying this is all good for BE, just summing it all up because the note's really long. So just summing it all up, they are buying BE. They expect Bloom to gain share of the powering AI TAM as a result of all of this. So bottom line is this stock has just been an absolute monster. Stock has went, it was $20 back in June. It's now $72. I don't know where the ride ends here. I don't know if I can chase it at this point in time. But man, this has been a big mover, and it just keeps finding good news.
So I mean, we kind of had this information, right? I mean, that because
Morgan Stanley though highlighting it, so we know analysts drive price here. You know, like even yesterday, I think it was Piper driving Amazon higher too, just on commentary. Analyst commentary sometimes doesn't even take a rating, just a price target bump and positive commentary, and then it highlights it, and then it gets people talking about it again. So, I mean, all stocks is supply and demand. So when, you know, people start talking about the stocks and they get excited about it and analysts start coming in, they're like, oh, yeah, man, that's a good idea. And they go and buy it. That's what's happening this morning. It's up 7.58%. So really ripping higher here, too. So this is benefiting from Oracle. So there are derivative plays from the Oracle bounce here as well. Now, Oracle's leaking a little bit here. We were a little bit, you know, profit-taking ideas at 318. It's back at 315. 219,000 share buying balance here on Oracle still too. I'm still not fully convinced that this is a chase move here on Oracle. I think it was good to buy the dip a couple days ago, but I don't know if we'll be chasing at this point in time.
This on the analyst move. I mean, you know, I don't want to sound a little bit skeptical being up $5, but if you had this on for a trade, you had bought the 70 calls on a whim last weekend. I mean, this is a pretty nice windfall. 72.09 is just off the pre-market highs. So I would say we're up here in the stratosphere, set $72 here. If it doesn't hold that off the open, you got a ways to go to fill the gap from the top of yesterday's range. So, but it's 8:35, folks, and we got a special guest coming on here at right now. I'd like to welcome Jasper Singh.
Good morning. Thank you for having me on.
Son. Good morning.
Good morning. How y'all doing?
We're doing good. And he is down in the Motor City, right? Looking out at the beautiful downtown Detroit. You can see the Detroit River from his office. Welcome to Pre-Market Prop.
Well, thank you for having me. Excited to be here. First time guest.
Yes, and he has the privilege of working with Aaron Bry. It's over there hardworking over at Briefs Media and Minority Mindset. I mean, I kind of got to ask you, 2.3 million YouTube followers. I mean, holy macro, that's quite the following. People want to know about long-term investing in macroeconomics, don't they?
Yeah, I started this channel approximately 10 years ago, not really knowing where it would go, more of as a hobby, because I felt like there was nobody teaching this financial side of stuff. And I grew up never learning about money or investing. And so it just slowly started to grow, and then it really started to take off. And now people really care about investing like never before. It wasn't like that 10 or 15 years ago.
I want to ask you a question here,
Right.
Jasper. Is everybody's got so much short-termism here, like just looking, at, making the quick money, the YOLO mentality. Like, I want to just get rich fast. I want to know the stock that's going to go up 50% tomorrow. How, like that's a dangerous game, just when you're chasing gains. How do you get that mindset of starting to look longer term investing? Because I've always been a good short-term trader too. And the long-term investing, my short-termism comes in, and I end up selling my long-term stocks. I'm like, oh, I think it's gone too far. How do you change that mindset from being so short-term focused to taking that longer-term approach?
Well, I think it's kind of just looking at what the data says and what history has showed us. The best returning brokerage accounts are of dead people. Why?
I've never heard that.
It's true. It's a fact. It's proven. And the reason why is because they're not selling. And so when you start to understand that the reason why so many people lose money in the markets, despite the fact that markets go up over the long term, oftentimes it's because of ourselves. It's because we make emotional driven decisions, while the long-term investors can separate that emotion from logic. And that can be very difficult. But I think that's the real key, assuming you have a good asset.
So, okay. Well, how do I, without dying here, because I don't really feel like dying tomorrow here. Yeah. How do I stop trading my long-term account? Because I want to know this, because I do it too much. What do I do? Is it I keep it separated? So, I think first thing is separate your accounts probably helps to a certain extent, where you don't have your short-term trading in your long-term account. But, just going back, the Warren Buffett approach, to the markets here. And Joel Elconin, actually, you're pretty good at this too. I should say your wife is at holding longer term. So, what are some specific tips to start thinking about, without dying here, to hold longer term?
Well, the other tip, I guess, is throw away your account password. But let's assume that it's going to be in your account.
I don't have it.
Yeah,
I don't have it.
So the real thing now is understanding your strategy, because what happens, I've seen with a lot of people, is they say, I want to be a long-term investor because I know Warren Buffett's strategy has built a lot of wealth. And then you start buying good investments, And then you go through a downturn. You go through a 2022, you go through a 2020 where markets go down. And now all of a sudden, all of the logic that you had goes out the window because people are panicking. You look at the news and people are talking about how markets are crashing and how everything is coming down. And now you wonder, oh my God, is this the end? Is this different than before? Our market's going to crash? Am I going to lose all my money? And now that emotion starts to kick in. And what I'd like to talk about is this also now creates for the other person some of the best buying opportunities of all time. I call it POOP, P-O-O-P. Panic leads to overselling, leads to opportunity, leads to profits.
I'm learning so much here in 5 minutes. This is good.
And look, the reality is those downturns create some of the biggest wealth building opportunities of all time. But if you bought at the peak of 2022, you bought at the peak of 2020, you bought at the peak before the 2008 crash, if you just held on to your good investments, you would still be profitable today, assuming that your investment did not go bankrupt. And so this is where understanding these downturns happen, knowing history repeats itself, or it doesn't exactly repeat itself, but it rhymes. But you're going to see these things happen again and again. It can help you position yourself and get excited when the downturn happens, as opposed to getting emotional because you know what to expect.
We taught all different type of investors, on our channel on PreMarket Prep, and there's different time frames. How do you address I'm sure with 2.3 million YouTube followers, you have a lot of different variants in the ages of people that you're talking to. And one thing when I talk to younger people, picking stocks and indexing, putting that money away every month. How do you sort it out for people of different ages and different stages in their investing life?
Well, really, I don't. I talk to myself. Because the reality is, whether you're 65 or 25 and you want to grow your wealth, it comes down to the same three factors, TRM, time, return, and money. The more time you have, the more wealth you can build. The better your returns, the more wealth you can build. The more money you invest, the more wealth you can build. And now you just play off of those three factors. If you're 65, you have less time than a 25-year-old. If you have more time to research your investments, you can work to get better returns. I call this being more of an active investor as opposed to just investing in the S&P 500 passive investor. Or now you can focus on the money side. If the most you can invest is $100 a month, yes, you can become a millionaire if you start at the age of 21 or start in your early 20s. But if you're starting at 45 or 55 and you only have $100 a month to invest, well, either you're going to have to get extremely aggressive with higher returns, or you're going to have to invest more money. So you can play around with that formula depending on where you are in your life and see what's most accessible for you in that stage of your life.
So we talked the long term here, and people get very focused on the short term, and a lot of implications can be drawn from the Fed. So following the macro economic picture, we have an interest rate coming, but what in the long term, what does this all mean? Like the Fed meaning interest rates cuts. What's it mean long term?
Yeah, so interestingly, we have a newsletter called Market Briefs, which is a free daily report of what's happening in the markets. And we try to engage with our audience through the Market Briefs newsletter. And that has been the hottest topic for the last, I don't know how long, because this buildup of interest rate cuts coming has been really turned into a spectacle, because President Trump has been demanding 1% interest rates. He's been demanding lower interest rate cuts. The Federal Reserve Bank, driven by the chairman, Jerome Powell, has said, no, we're not cutting interest rates because of tariffs and inflation. And now we're at a point where we're kind of getting these hints that, okay, fine, maybe we'll cut interest rates right now in September. And then in 2026, when Trump replaces Powell with somebody else, we might see even more aggressive interest rate cuts. So your question is, well, what is the implication of these interest rate cuts long term? And the reality is if we look at this from a historic level, the interest rates that we have today are not high. They're actually closer to our average rather than being quote unquote very high. The second part that we have to think about, like we just said, is that we know recessions happen. We know market crashes happen. They've happened every decade for the last century. We've seen 16 recessions over the last 100 years, 25 bear markets over the last century. So the next time a recession happens, if we don't have a lot of wiggle room with moving interest rates down to stimulate the economy, because the reason why you cut interest rates is to encourage borrowing, to encourage spending, to boost the economy. If interest rates are very low, how do we then stimulate when that recession happens? And now we have to turn to money printing. And that's something that we saw happen in 2020. We first really saw it happen during the 2008 crash. And that also has its own concerns, because now if you start to just create more of this money out of thin air, we now have to worry about the debasement of our currency, the losing of value of our currency, which is something that people have become much more vocal about post 2020, because we have a lot of now other countries around the world that are trying to capitalize on this idea that maybe the dollar is losing value. And so now we have the BRICS countries, Brazil, Russia, India, China, South Africa, kind of banded together, trying to see if they can create their own currency or their own alliance to compete against the United States. We have certain countries looking to purchase more gold in order to strengthen their currencies. And so there's a lot of this type of geopolitical currency manipulation game at play right now, which is a little bit newer, not new as in it's never happened before, but newer in the way that we're experiencing it. And so to combat that, President Trump is now looking for ways to help strengthen our dollar while trying to not explode our national debt by doing things like considering gold revaluations, building this Bitcoin strategic reserve, doing other things to help strengthen the value of the dollar with all of these things happening. But you have to understand that this devaluation of the dollar, assuming that we keep spending money that we don't have, is going to happen.
Is that why the relentless rally in gold here, just even thought process happening? And we've been talking about it here too. If interest rates start to go down, inflation probably creeps back into this market, and gold is just your ultimate inflation hedge. Is that why, you think this, gold rally continues? And obviously it's picked up. It's not just gold here now. Silver has been on fire here. Not too many people talking about silver, but it's really ramped up here too. I mean, I kind of think like it's just defense against inflation, and investors are anticipating that inflation may creep back in 2026.
Yeah, absolutely. I mean, gold has been that currency forever. But one thing that I do want to point out is if we look at gold for the last 20 years, we saw a similar rally leading up to through the 2008 crash, because during the 2008 crash, we saw quantitative easing, and it was that we spent $1 trillion that we did not have, and it was this insane number. And so we saw gold prices break new record highs 2008, 2009, all the way through 2012. In 2012, when it became clear that the dollar is not going away, that hyperinflation is not coming, gold prices crashed from 2012 all the way until 2020. What happened in 2020? The money printing from the pandemic, and now the worries came back. Gold prices now break new record highs, and here we are in 2025. Gold prices are again breaking new record highs because of the concerns about inflation, the concerns about the lower interest rates, not to mention that there's been a lot of gold buying of central banks around the world at some of the highest rates that we've seen in recent history. So there's a lot of factors that are contributing to the higher gold prices because people are concerned about the dollar. But if, again, there's a big if here, we don't know what's going to happen, but if concerns about inflation do calm down 2026, 2027, you have to imagine that maybe now people say, oh, you know what, we're not as concerned, at least in the short term, let's go buy something a little bit more risky. Let's go back into stocks. Let's go back into something else. So
what about real estate? Let's take it to real estate here too, because if interest rates are coming down, usually very historically good for real estate prices, because obviously the major cost of owning a home is, the mortgage and those borrowing rates here. So, and people do look in real estate and get risky investments there as well. So if we do think maybe interest rates coming down, maybe inflation not a concern, maybe real estate for 2026. What are your thoughts going into real estate 2026?
Well, real estate has been extremely unaffordable at some of the most unaffordable levels that we have seen. And
For sure.
question is why? Well, number one, home prices have gone up 50% since 2020, while wages have only gone up 20%. And number two, mortgage rates went from 2.8% in 2020 up to 6.5% in 2025. So not only are you borrowing 50% more dollars, but you're having to pay a lot more interest on those dollars. And so now we finally have this point in the housing market where we're seeing the slowdown in a lot of markets. Actually, Michigan has held up very strong, but other states where we've seen home prices begin to fall because the demand is not there while supply has been rising. If you cut interest rates and we assume that mortgage rates go down, because the Federal Reserve Bank interest rate isn't your mortgage rate. So if the Fed cuts interest rates and then that leads to lower treasury yields, which then leads to lower mortgage rates, well, that would then, in theory, pick up demand, because now people are going to say, 4% mortgage rates, 5% mortgage rates, that's a little bit more affordable. I can go and afford this $500,000 house. And if that happens, well, you could start to see a few more bidding wars, and now that $500,000 house costs $550,000.
Yeah.
And you're kind of back to that same situation. So it really depends on supply and demand, because lower interest rates will increase demand. But now we have to look at supply, because if supply stays the same, well, then more demand, same supply, prices go up. But if demand goes up, and now supply goes up as well, because we're building more houses, more people are selling, or whatever the reason is, then that could keep housing prices the same or similar while your monthly cost goes down. The question is that going to happen? And really, everybody's got, I call financial opinions armpits. Everyone's got a couple, some stink more than others.
Analogies are great here.
I don't know what's going to happen, but I know the lower interest rates will increase demand. But the supply side, everyone's just speculating. And I know what could happen to increase supply, what can decrease supply, what can keep supply the same. But it's something I am definitely watching, because that is the backbone of our economy.
Before I let you go, someone in the chat mentioned the U.S. debt. I want to ask you if that's a concern, if that's something you're focusing on. And then before you go, you've talked about just about every asset class. I want to get your take on Bitcoin.
Sure. Yeah, I mean, the U.S. debt, it's definitely a concern. I mean, it's something, it doesn't, $37 trillion of debt is a problem. And the reason why it's a problem is because, number one, that number keeps growing. And number two, we keep spending more money that we don't have, and then we have to finance that spending through debt. And a lot of that debt then has to be printed because there aren't enough lenders to the United States government. That's the problem that we've been seeing. So why does that matter? Because the number one fastest growing expense for the United States government is our interest expenses. So that means more of our tax dollars are being used to pay interest. And now you're starting to hear people talking about, well, how are we going to keep financing these interest payments if they keep growing so quickly? And so people have talked about this idea of printing money to pay back our debt. And you can start to see how that becomes a problem. This is what Ray Dalio calls the debt-death spiral, where now we're printing money to pay back our own debts. So you're essentially paying off your Amex with your Visa. So that's why it's a problem. And in order to fix that problem, it's not easy. What do I mean by that? Well, number one, you can either fix that problem by spending less money or generating more tax dollars. If we spend less money, that's going to be a problem. Because in 2025, the United States economy is expected to be around $30 trillion. And we are expected to do about $2 trillion of deficit spending. Why does that matter? Because if we were to take out that $2 trillion of deficit spending, this borrowed spending from our economy, we would see a recession 50% larger than we saw during the 2008 crash.
Wow.
Because of how much money would be pulled out of our economy. So stopping the government spending, it's very difficult because we become very addicted.
Dependent on it. Yep.
Now, the other side is we can generate more tax dollars. Well, that's also not a very easy thing because we already pay a lot of money in taxes. We pay our income taxes, we pay payroll taxes, we pay capital gains taxes, we pay property taxes, we pay sales taxes, we pay estate taxes, we pay corporate taxes, we pay state and local taxes. So there's a lot of taxes that we pay. And now if we say, hey, we're going to raise your taxes by 50%, you can imagine some people are not going to be happy considering that so many people are already living paycheck to paycheck. That's why this is a problem. And solving the problem is not easy, but it's something that needs to be done. And so now your question is Bitcoin. I invest in crypto, but I look at it as a speculative investment. So I invest my money into my own business, Briefs Media, I invest my money into real estate, I invest my money into stocks, then I invest my money into speculative, and then 2% physical gold. The speculative is about 18% of my portfolio. And it includes things like startups. It includes things like cryptocurrencies. And so the way I look at it is if Bitcoin goes up, great. But it doesn't put any money in my pocket unless I sell it. And number two, if Bitcoin goes down to zero, well, it's a speculative piece of my portfolio. So I'm not going to really, it's not going to affect me that much. And so a lot of people look at Bitcoin as a digital gold because it is a way to hedge your money against inflation. However, the concern against that and the opposing side is anytime we've seen a crash, Bitcoin has fallen. And in fact, Bitcoin has fallen harder than the stock market. In 2022, the stock market, S&P 500 fell by 20%. Bitcoin fell by 60%. So it's more volatile. It has not proven the test of time. We can look at the stock market over the last 50 years. Bitcoin started in 2009. So, and then there's obviously technology risks, that there are technologies that could break the blockchain. Quantum, although quantum could impact all aspects of finance. Or with the growth of AI, with the growth of technology, there could be an alternative that is potentially better than Bitcoin, making the value of Bitcoin drop quickly. And so there's a lot of risk for a lot of potential return. I started buying Bitcoin back when it was around $3,000 a coin. And it hasn't made me any money until I sold it and then I bought some real estate. And now that's putting some money in my pocket. So, for me, it's speculative. I think it's great for the right person, but understanding the risk and reward that comes along with it.
Well, thank you so much for this extended interview here at Jasper Singh Minority Mindset, talking more macro long-term. Our chat loves your commentary. We're going to get you on again real soon. Thank you very much.
Thank you for having me on. It was a pleasure. Bye, all.
Thanks, Jasper.
All right. Big shout out to Aaron Bree for helping arrange that. Triple D, a little different perspective on the markets. I know we went an extended time, so maybe we can stick on here for a few minutes longer.
Yeah, we'll go an extra 3-4 minutes here just to get our stuff in here. That was awesome, though. I like the long-term perspective here. We got to start thinking, both time frames, short-term and long-term. Back to the short-term time frame. We've got Hershey. Yeah, no, just quickly. HSY getting double upgraded from GS here this morning. They are going from sell to buy, raising their price target from $170 up to $222. They're upgrading Hershey to buy from sell. After multiple guidance reductions over the past year, we now see a compelling risk-reward setup for the stock with cost pressures largely known and reflected in expectations. Plus, the company's market share trends have improved with incremental tailwinds expected in 2H. Additionally, we expect recent pricing announcements to drive outsized earnings growth in 26 with a solid consumer backdrop supporting better than expected elasticities, noting Hershey's historically strong pricing power tied to its iconic brand portfolio. So they are coming in here. Hershey's up 3.11%. I've never made a lot of money chasing a food stock or, a consumer staple here, but Hershey is trading up here this morning. And if you're long, that's a nice little move here.
Yeah,
HS1.
that's a big move here. 191.34. Do we have anything on the dailies? Next daily high is there's two highs just over 191, so make sure you hold that. Next daily high 192.67. If you want to get in this one, I think you might see some cheaper prices here in the Great American Chocolate Bar, Hershey's.
So a couple minutes here. One more rating to cover. NEO catching an upgrade at UBS. I feel like this has got a couple of upgrades here lately. NIO trading up here, 2.62%. UBS, just getting the note here, digging in. Yeah, UBS upgrading NEO to buy. Analysts, we upgrade NEO to buy as company's latest products could further attract customers after the $1 billion equity offering strengthened visibility on its healthy operations. Raise our price target from $620 to $850 based on 1x 2026 price to sales.
First things first, let's get through yesterday's high. We've come up to it a couple different times and have failed. So yesterday's high, 683. Did get hit off the offering, but coming back, let's see if we can get into the 7 handle in NIO.
Hey guys, want to pop in here and say thanks to our sponsor, Hive, for today's show. This show is brought to you by Hive Digital Technologies, a global leader in green power data centers for Bitcoin mining, high performance computing, and AI. Operating with nearly 0.5 gigawatt of renewable energy, Hive is on track to capture 3% of the world's Bitcoin production by the end of 2025. In the bottom right corner of the screen right now, there is a QR code. You can scan that code, or you can click on the description in the link of this YouTube video to learn more about Hive. Thanks again, Hive, for sponsoring the show today and this week and this month, for that matter.
Awesome. Stock's been flying too. Holy cow.
Okay, wrapping it up, folks. We'll see. One day ahead of the big Fed meeting.